What's going on, traders? It is Antoine Farrar back with another trading video with Digital Goatz Academy. Welcome to our market forecast. Today is Tuesday, obviously, so you know that's when we do our market forecast. If you've been following me, so as we know this week, again, like I've been addressing for like the past like 2 weeks, 3 weeks. We have the Fed rate decision coming up tomorrow. Now, I know there's been a lot of a lot of negative talks in the community, in the trading community, as far as like, are we going to get a rate cut? Really, there's been talks that we're going to get a rate cut from experts, but that was the expectation from the European Central Bank as well, and they just had their interest rate decision. What was that? Last week? Last week they had their interest rate decision on, I believe it was either Thursday or Friday, and the market played out exactly how we expected it. Well, I can't say exactly how we expected it, but the conditions never changed. So as far as their rate decision, it was unchanged, which basically technical analysis was going to be at the forefront. So that's what I'm expecting tomorrow, hopefully. You know what I'm saying? Excuse me. Man, my voice has been like hoarse. But anyway, that's what I'm expecting tomorrow is that the United States, the Federal Reserve, will probably follow the play of ECB. But if we do get interest rate, I mean a rate cut, I don't expect it to be no more than like I don't expect it to be no more than 25 basis pips, which if you look at it across the board, that'll be like 250 pips.
Okay, Trishan.
250 pips. Hold on real quick. But yeah, so that's what my expectation is that we're gonna have unchanged data. That's what really I'm hoping for. So let's look at what happened today and then what our predictions is going to be for the market the rest of the week. I am still bullish on indices. Now, let's actually look at S&P first of all, because S&P and the Nasdaq have definitely been the game changers for the past couple of, really the past 2 months. They've been, I'll probably say the past 3 months. They've been the ones, the indices or the currency pairs that have been breaking highs, that have been continuing in bullish patterns. Now, this is what we drew based off of Sunday. We were already in this position right here. So Sunday, I had boxed up this area, which is consolidation, as you can see. But like I said, I'm gonna figure out what this is called. There's a term for this pattern. There's a term for this pattern, and I forgot what it's called, but I'm gonna find it very soon. And then that way we won't just label this as consolidation. We'll label it for what the pattern is. Now you can see if I drag this all the way over. So S&P started off bullish. Well, it started off bearish. Every market started off bearish. S&P and the Nasdaq finally broke out. I'm not going to necessarily discuss the Nasdaq, but I'm using its reference to showcase that, you know, indices were basically bullish. The only index that has been struggling but still remaining bullish is US 30. So I'm gonna discuss that in a few. But S&P today broke out of the zone. This is important for us to treat trading very simplistically. Because what ends up happening is that you create these false ideas into your head based off of like really based off of panic. You know what I'm saying? So a lot of traders, I know we've hit new highs. So what's normally the expectation for retail traders across the board when you hit a new high? The expectation is that the market is going to fall down or the market is going to start reversing because it created a new high. So a downtrend should start forming. But we don't know where that high is at, right? So if we back out, if we scale out to the weekly time frames just for S&P, we don't have any data to the left anymore. So we can't say that, yes, this is a new high, but we can't say if price is ready to turn around here, which I don't think that we are. You know what I'm saying? Man, S&P is straight playing to that pattern. We discussed that based off of GU, straight playing to that pattern. God damn. But anyway, so we don't know if at this point price is building resistance is what I'm trying to say. You know what I'm saying? So we have to believe that the trend is still true. So this is an uptrend. Let's actually ignore all this. So as you can see, this is an uptrend. Price has still been trending up, scaling up, buying up, whatever you want to say. So to try to predict where the market is going to start selling off, that's gonna hurt you. And I'm not saying that the market won't pull back as we've been seeing. We've been seeing pretty aggressive pullbacks within the market that will give you the interpretation that the market wants to sell, but that's not what's going on. It's doing that to push down to a support structure in order to buy back up, and that's what we've been doing. So today we finally broke out of that area and it shot up. Man, did S&P shoot the fuck up, right? So S&P shot up and then finally towards I believe it was opening bell. This was probably opening bell. No, this was 5 a.m. that it did that and then opening bell. So it took a long time. As you can see, prices, well, the market is pricing in that data for tomorrow. That's why the market is acting all choppy and slow because once we get that data tomorrow, then we'll have momentum. But I just like to keep things simple, right? This is consolidation, as we know, broke out of consolidation and is turning around. You know what I'm saying? That's what it looks to be doing. But it could test further into the zone. But I like that it did create, some form of structure right here, as you can see. Let's turn to a line chart. Some form of structure on a pretty moderate time frame, or on the hour time frame, for me to be convinced that yes, we're probably just testing this high in order to continue up. Like I said, between Nasdaq and S&P, they've been hella bullish. So they have definitely been the pairs that you wanted to trade the past 3 weeks at the very minimum. But really, when we look at the past month, S&P and the Nasdaq have been the ones that we probably should have been staying focused on. But I believe that US 30 is still gonna play to the same tune as S&P and the Nasdaq. I just think that it's building up equity in order to do that. Now, let's actually go to US 30. Well, there's not much to discuss on S&P other than I do think this is a pullback. This is the consistency that we've been seeing in the market, right? The consistency we've been seeing in the market is that once the market opens for Sunday, it'll start creating its trends, right? Whatever direction. So mainly we've been bullish, right? But the market has been basically stalling out around post market, which means when 5 o'clock comes, our brokers shut us out, and then the market is doing like its cool down period. More data is being priced in. What has that been doing is bringing the market down. And then now we've seen this before early in the year, but we were on the selling side of the market, right? Where the market will get brought down and then start buying back up towards London. It'll get brought down into London and start buying back up towards London, right? And then we've been brought down, price has been brought down due to opening bell. So based off of that knowledge right there, I have no choice but to believe that this market is still bullish. I know how we closed right here, but we definitely do need for the next candle to open up, which the consistency has been is that, again, I just said it. The market has been brought down in order to either test a certain support structure or being brought down towards London. Now, that doesn't mean that, okay, you hear that and you start saying, well, if it's going to be brought down during London, and the movement is going to happen post market, then what I'm probably going to do is just sell the market, right? No, you don't do that. You wait to see how price is building its support structure, its resistance structure, so forth and so forth, and then you execute there. Because if we go to US 30, no, I meant to stay on S&P actually. So if we go to S&P where you can see, let's see. What's this example that I was looking for? I guess we'll use it. We'll use it based off the 33-minute time frame. So this is where the market opened up this week. This trend right here, right? You can see that once we got into the pre-market of London, started showing rejection wicks, and then finally sold off, right? This is a 3 a.m. This is a 4 a.m. candle. So we sold off, we started getting bearish, and then we finally sold off at 4 a.m. That's London. That's an hour into the London market, right? And as you can see, the market got bullish from there. Now, what I wanted to highlight is that even though we could have said that, now you probably maybe could have taken a sell. I wouldn't have risked it, but maybe you thought about taking a sell. And the reason why I'm against it is because that based off of this structure, you don't know where the turnaround point is at. You know what I'm saying? So yeah, it did come to a form of structure for the market to test off of. Right down here, this is consolidation. Let's just make this into blue so we know it's support, right? So it supported this, but we didn't know how low the market was going to travel. So that's why I'm against trying to, if you have your directional bias, I'm against trying to counter trade it. So yeah, you probably could have taken that position, but it's like, why when the overall move was better? You see what I'm saying? So I don't want traders basically hearing this information and saying, well, that's been the pattern. I'm a sell and the sell is shallow. You're asleep during this time if you're in America, you know what I'm saying? Unless you got your alerts set, you're probably asleep. And the market just trickled on up all the way into New York. You know what I'm saying? We don't want to do that. What we want to do is identify the possibility and see where the market turns around. Wherever the market turns around, that becomes your support. You know what I'm saying? Now we're not looking at it like I say that loosely, but don't look at it so vaguely. You know what I'm saying? Like there's going to be structure. The immediate market is going to give you data. You know what I'm saying? There's going to be structure for you to use to guide you on when the market, if the market pushes down during like post market. You see what I'm saying? So this, because this was our support structure, this could be a possible area that the market decides to retest it to. I don't think so. I think we'll just respect this high because I like this bounce off here. And as you can see, the market started pushing up slowly. So we did just close bearish. It is 5:02 now. We did just close bearish 2 minutes ago within indices, but that's something that I'm used to seeing just because like the market is probably gonna, gap down slightly, test within this area, and then again, start buying back up wherever the buyback point is at. You know what I'm saying? So again, don't hear that narrative of it's being it's being brought down and you try to sell or you try to over anticipate where the turnaround is going to be for the buy. Just recognize that. And then around 3 a.m., 4 a.m., you should be trying to find a buy position. If the market plays like that today, we do have news coming out. So that could change things, you know what I'm saying? Because we have news coming out tomorrow. So that can change the conditions, but we'll see, you know what I'm saying? As the market gives us data, we'll see if it starts pushing up. Now, if it starts pushing up, what the market may want to do is push up to this resistance. And then from there, it might try to sell off from there. But I don't think so. The one thing that I do want to highlight is that we have to respect all forms of structure, right? Because the market is definitely respecting it. That's not to say that, scare yourself out of a trade, or that's not to say that your overall bias is wrong. Now, if you have low positions, like if you are buying indices, then yeah, you probably have nothing to worry about. But what we want to do is make sure we identify where structure is at in the market, so we're not surprised if the market starts rejecting it. You see what I'm saying? So if we get all the way up here and the market starts slowly, it could break high, but it needs to close a candle, right? On the same time frame that the market is like bullish at, right? So we want to see it probably like on an hour time frame, close there, close above that, slightly push down, and then continue buying back up. We don't want to see it start stalling out here, which I'm not saying that that's a trigger for reversal because again, I'm overall bullish on indices. The one thing is that I saw that US 30 did. Are we on US 30? Yeah. One thing I saw that US 30 did is that it respected the 50%, not to mention this was a previous level of resistance that we broke up out of. We have to keep things simple. And you'd be surprised how often indices do things like this, where they really keep it simple and then, test these areas of structure that we're used to seeing. So if resistance is broke up out of there, we normally need a pullback and the market tests that, and it's still maintaining this trend. Now, I've already spoke to my community. I said, this is a gamble for me because everything we've been analyzing throughout this year, we've been pretty concrete on it. You know what I'm saying? Tomorrow's the only day this year I'm unsure on how the market is going to respond. You know what I'm saying? And I've been pretty sure, even when I've been wrong, I've been pretty damn sure. So tomorrow's the only day this year so far that I have slight uncertainty, so I have to base it off of price action. The market is still trending up. The fact that it rejected my trend line again, this is an imaginary trend line. All I did was draw it from the market, started creating its lowest point and started moving up because what I believe was going to happen is that we were going to start consolidating upward until we finally get our breakout. This was like our initial of our breakout, but we really need the market to start pushing higher in order for it to truly break out. It does that, like US 30 does that. Once we get to a cool down area, yes, I do think that at that point we're not reversing, but say we get to 47, where's the area? I think I had it at 47,600. Say we get to 47,600 or anywhere in that ballpark. I'm not saying that it's going to reverse from there, but there could be a major pullback to test the area that it broke out of initially. You know what I'm saying? Of course, on the buy, when you look at indices, it's not as straightforward as the sell because the buy is going to be infinite. The sell is like short term and stuff because it's inducing losses in the market. So when a sell is going on, doesn't it look violent? But when a buy, presents itself, it looks questionable or it starts shooting down like it's selling, making you question your position. That's how you know it's buying up. If you got a question if it's buying up and you're like, how is it pushing down? And it's been doing, XYZ. That's how the buy works because the buy is not just going to give it to you like the sell is. The sell happens so fast because it's trying to get to support structures that is basically going to give you money. You know what I'm saying? The buy is trying to manipulate people. And unless you're in key positions, such as we had here, and then the market returned back to this. This was when Jerome Powell was talking. We had that percentage. You see how it built resistance? And finally, we're above it. This was the resistance area that it was struggling to break. This is why I'm confident now that we're not selling. I mean, I'm saying that in an iffy way. You know what I'm saying? But because no matter what, whatever is priced into the market, it's going to make the market react. So even if it does decide to say, I want to push down 25 basis points, I don't know how violent that would be for indices, but I'm assuming that it'll probably push us lower if we get that type of data. We'll probably get pushed a little bit lower than these positions in order to break the trend, make people skeptical that we're even buying, come back to another area like this consolidation pattern over here, and then buy back up. But like I said, I don't think so. I really think that this is our area because what we've been seeing with indices is that wherever it creates support, that's where the support is at. So if we go back to even to the JOLTS data, yes, I had prior information here, but I wasn't sure if the market was going to buy back up. You know what I'm saying? So we had this JOLTS data, the market consolidated, finally pushed up, tested that area. But what indicator did I have other than me just being confident in this area and that it was a consolidation zone, that it was testing, and there was a pattern over here? There was really, it just created support out of nowhere. You know what I'm saying? Because it could have come all the way back down here. You know what I'm saying? So where this gap is at. US 30 could have pushed itself all the way back down lower or to this consolidation, into the consolidation. So you see how wherever it's creating support, you have to respect that. You can't say, oh, well, I think it's going to come all the way down here and it doesn't do that or reject shallow. So for instance, just from this zone, what about traders that was expecting price to come back to this support structure? Mm. Shallow retracement. But guess what it's been maintaining? That imaginary trend line. Again, price pushes up, starts consolidating. I had a feeling that we might have dropped here once it never broke this area. And today was the day that the market got brought down. But what have we been seeing well, not the whole year, basically since April? Every push down has been a buy back up. Every push down has been a buy back up. Every push down has been a buy back up. Every push down. So even with us being slightly off, we're still not off or whatnot. Now, if you were in this position, if you were still, well, no, not you would have got cleaned out. But say you bought JOLTS data and you're still in, you're pretty much clear. You know what I'm saying? The only thing you got to worry about is if you bought higher and price is going to come back to these levels. But price has been maintaining the trend, like I said, in the most easiest, simple way that we can identify market structure. Price has been maintaining the trend, but also we have other areas of structure that price should be respecting. This was resistance. Price tested into that area, maintaining that trend. So we should buy back up from this area because we broke out of this resistance zone. You know what I'm saying? Again, this is where traders get themselves in trouble because it starts becoming a game of where it's like, oh man, it's resistance. Well, shouldn't it be selling this resistance? This looks like a downtrend, right? Well, shouldn't I sell? Now that that happens, I'm not saying that there's not a possibility that it couldn't do that, but I don't think because of the consistency that we've seen every time that we've sold off, we've created resistance. I mean, we've bought back up. And this area hung out, what was this, for like 2 weeks? I think this was like 2 or 3 weeks and hung out in this zone before finally breaking to the upside. Yeah, I'm still believing that we're buying back up. And this is the test. This is the pullback to match up to this candle. Let's actually see what that looks like on a higher time frame. If you're tuning into this video, make sure you hit that like button, comment, and subscribe. We've definitely been growing our channel, so special shout out to our patrons and subscribers because this is beautiful for us. You know what I'm saying? This year, like we've really been doing powerful and phenomenal things here. So I definitely tip my hat to everybody that's been showing up and every trader that's been definitely excelling off of my YouTube. So appreciate that, but just make sure you hit that subscribe button so we can get to 1K before the end of the year is over. But anyway, so this is consolidation. Now, this is a consolidation form that I've seen before where the market will shoot down and then it'll buy back up on the opposite side. That's what I'm kind of expecting is going to happen within this zone because finally we have structure right here. And I like that we did close as a candle. So the next 8 hour or the next daily candle should open up bullish. Even if it gaps down, the end result should be a bull candle. But if it's not, well, if it's not, it's going to be triggered by opening bell tomorrow. So we should buy back up. Now, if we do get back up to this area, this is the zone that we need to break. I do believe that the market is going to try to play people by bouncing off of this a little bit. Let's draw the line up. Let's go to the board, as Kenny would say on Sports Center. And wait till we start going live, family. Wait till we start going live. Because I'm going to go to the board. I'm like, I'm going to the board. You know what I mean? So say it does something like this. Starts stalling. You're like, oh my gosh, this thing's selling. And it does that. I don't think that we're selling. I think that we're doing this. You know what I'm saying? I think that is going to draw people in, draw sellers in. Once we get back up here to push the market down, that'll be the pullback and then shoot the market up. Now, that'll be triggered. There's a lot of news coming out. So we can see the initial push of this, and then we can get more data that should push the market down. And then the market just continues to flip, and it'll be violent. And to be honest, I don't think we'll see these levels like anytime soon for like at least another 5 years. If the market does decide, if price does decide to come all the way back down here, I don't think we'll see this for like until Trump's time is over. And then who knows? But with every new data that's been, or every new sanction that's been, like policies that are changing, every new piece of data that's been forming, the conditions of trading has changed greatly. It's not like how it was in the 80s. It's not like how it was in the 90s and the early 2000s. So even though we do use past information to determine what the market is going to do in the future and then how to read it in the present, all that stuff might not be relevant. It's good as like a foundation and like a guide, but don't hold dear to it so wholeheartedly, you know what I'm saying? Where you confuse yourself, where you make mistakes because you're relying on past data. Again, I think I said this on the last call that as retail traders in 2025, with us, it's up to us to annotate and, you know, record this information for the next generation and stuff. So we're seeing in front of us history being made with new data being presented. Cryptocurrency wasn't a thing 10 years ago that greatly affected the market. There wasn't as many investors that are under that are either minimum wage or under 6 figures a year. You know what I'm saying? That's now into the market. You have to factor that in, which means that the stuff that mattered in the past, like you got to kind of toss that aside, yo. You use it until it's no longer useful. You know what I'm saying? So that's my expectation for US 30 and S&P, just indices across the board. If we're just looking at the NASDAQ real quick. So I do think that that resistance zone is a buy zone for US 30. As you can see, the NASDAQ is out of here, yo. This was the area that we were looking to buy from the beginning of the year, and then that's where it sold off greatly. I even traded NASDAQ like one or two times, but man, it's so violent, yo. It's so violent. It's like I mean, it's like gold to me. What? And this was June, so had basically I bought the Nasdaq in June, I would be straight. You know what I'm saying? But with all those swap fees, you don't want to acquire that. So the best thing is that each day or each week, you know what I'm saying, you hold the buy up. But man, we could still be in this. Even down here, I was looking at this area. Now this area was, I think, what cleaned everybody's clock. So this was August, yeah. This was August. This would have even been, what was it, Friday? This would have even been a good buy zone on August 4th, or at least here. I probably would have said here. Maybe September. September, the beginning of this month. This was a good buy zone. I don't know why I have this annotated, but I just wanted to showcase the NASDAQ that one, if the NASDAQ is up, cryptocurrency is going to be up. So this is good signs for cryptocurrency, which is like you see how bullish it is. And I know there's a lot of fear into the market, but I can't believe, like, I can't see it coming down, you know what I'm saying? Just because there's a lot of scarcity, or there's a lot of scare tactics being triggered about a rate cut. Now, the market is going to try to force people out of their positions, but I just don't really see a rate cut. All this still looks like strong, market data to me. This looks like a bull trend to me still. And we would need to come back here and test this, but I just don't think that we're ready to do that just yet. So I'm just giving y'all a brief, analysis on NASA, really just talking about it. I'm not really giving anything because again, I haven't narrowed it down to confidently give entry points for NASDAQ. So if anything, I'm still thinking that we're bullish. The only thing is that are we going to start consolidate? Well, this is a 2 week. Let's look about a day. Yeah, we're going to start consolidating here before we continue up. But NASDAQ, S&P, they definitely been on a bullish tear. So shout out to them. So the last two pairs I'm going to go over is stuff that I dropped earlier this week from our community. And this was based off of information that we saw last week. No, what was this? Yeah, last week. So CPI data, right? That's crazy that it's still up from CPI data. Oh my gosh. So this was CPI data last week. Price pushed up. And this was Sunday because I remember annotating this. This was Sunday. I had my 21 EMA. So I think it was, what time frame was that? I want to see exactly what candle that was because I remember. I think it was this candle, actually. So this was the 5 o'clock candle. No. This is Sunday. Yeah, that was it. Because this was the candle that opened. It looks different because new data is formed. So it's not showing exactly what I saw. But anyway, the market pushed down. And I even mentioned this within my community that I believe that the market's going to push down. We're still bullish. The market's going to push down to the EMA, which it did, and then pushed up, obviously tested the market. Oh, this is where it tested again. So it did. It pushed down, then it tested again and pushed the market up. And we've been bullish since Sunday. You know what I'm saying? It's been slow, choppy, but the trend is there. So for a fact, you can see that it's up. You know what I'm saying? So GU has been up, and that was based off of that interest rate decision from the ECB. So the European Central Bank, that's how we were able to even take advantage of this. We did know the overall trend, but the conditions could have changed because if they said that they were going to either do a rate cut, well, the only thing they could have done is a rate cut because they're overly inflated, right? So if they were going to do a rate cut, so the rate cut happened. I mean, the rate cut didn't happen. It was unchanged data, which means that we had to focus on just technical analysis on the higher time frame. What was the overall time frame doing? I looked at the daily and the weekly. We're still bullish. I believe that we were bullish. The markets kept pushing up. Now the reverse happened for USD JPY. So we've already been seeing that the dollar's been bearish, right? So the same thing. Now, this did affect the dollar, even though this happened for the European Central Bank. So over in Europe, you know what I'm saying, the United Kingdom area, even though, because again, our currencies are tied together, so they affect one another. So when I looked at that data and before the news came out, I had already told my community because we got the information before the 8:30 candle, the interest rate decision is unchanged, which means that price action, the only thing we can rely on is price action. So CPI data drove UJ down and then it created resistance the following day. So the next day it drove down and then when the mark, well, at Friday, it ended up pushing down here, and then this was the pullback over this area Sunday. And as you can see, we've been straight selling since then. To be honest, I ain't even get in this pair. I didn't even get in GU, but I saw that opportunity just based off of data. And again, I went off the overall time frame. So I am looking at GU and USD JPY to continue, well, GU to be bullish, continue buying up. And I'm looking at UJ to continue selling until it hits a support structure. Now, because I haven't been paying attention to them, I don't know if tomorrow is going to be where it tries to do a slick pullback and actually raise itself all the way back up here. But if not, well, again, it just depends on what the decision is. But we'll kind of know what happens before that decision. You know what I'm saying? So if the market is bullish before Jerome Powell gets to his decision, now it is dependent on what he says. More than likely, it's going to stay bullish. So if by London we start to buy up, the market should want to continue buying up. But if by London, like going into New York, going into pre-New York, the market is still like choppy and stuff, we got to reassess, and that could spell the disaster. I wouldn't say the disaster, but that could spell a rate cut. You know what I'm saying? Being induced in the market because normally price action is still going to let you know what it's trying to do ahead of time. Even with the CPI data, I was already looking to sell UJ. Even with the CPI and jobless claims data, I was already like, I literally could have just hit the sell zone where I was looking at, which was right here, which was up here. It was up here somewhere. I could have hit the sell zone button, but I just decided to say, let me wait for a little bit more data. Um, and that's what I did. No, matter of fact, CPI, I'm sorry, CPI. So I could have sold, like, y'all had to see this candle, like, when I was looking at it. So it stalled out. And then as soon as CPI came out, boom, shot the market down. And then eventually the next day into Tokyo and Sydney and Tokyo, the market got pushed up to create resistance and then pushed down. And as you can see, we have three resistance points, which really this signifies a downtrend. But three resistance points that I annotated. Let me show you so it looks clear. But three resistant points of contact that the market created. This was the low. The reason why I said previous low, because if you break down this candle even further, it had a doji, which that was the low. The market definitely loves to be attracted to low points, which a doji is what? A form of what? Consolidation. So it makes sense that the market went up to consolidation to test it and then push it down. You see what I'm saying? So I am looking for USD JPY to remain. Not to mention, um, if we start getting bearish momentum from gold, that would make all the sense in the world because that means the yen would be going up, and that would make it stronger. Well, maybe stronger against the dollar. Really, we're banking on the dollar to still remain weak. So if the dollar still remains weak, obviously, even if I mean the British pound is not super strong, as long as it's just strong, a little bit stronger than the dollar, price will still buy up from there. But that's all I got, traders. Thank you everybody for participating. And well, I hope everybody has a successful trading week. Don't get caught with your pants down tomorrow. Make sure you close trades, set stop and profits or set stop losses, everything you need to be successful tomorrow. I see this as a big turning point for traders to really set the tone for next year, you know what I'm saying, on how the market is going to be predicated next year. But like I said, I hope everybody makes a lot of money this week. As always, I'm Antoine Farrar signing out. Peace. If you're on, you can still stay on.